Today in this video I am analyzing companies which are into two-wheeler manufacturing. The companies I am comparing are Bajaj Auto, Eicher Motors, Hero Motors, TVS Motors. Eicher Motors is also into manufacturing of trucks and heavy vehicles along with two-wheelers, and Bajaj Auto is also into manufacturing of three-wheelers. The current market price of Bajaj Auto is 2723 and its face value is 10. Hero MotoCorp's price is 2570 but its face value is 2. So even if you multiply it by 5 times, the price becomes around 10,000 rupees. Whereas TVS Motors price becomes 10,000 if we multiply the face value by 10 to equalize it. So in that sense, Bajaj Auto is, the price of Bajaj Auto shares are quite low. Bajaj Auto is down from its 52 weeks high by 14%. Eicher Motor has fallen by 36% from where it was 1 year back. Hero MotoCorp and TVS both saw a fall of slightly above 25% each. Here we don't want the fall to be very high. It also indicates that higher the fall, the weaker the stock is, and lower the fall, the stronger the fundamentals of the stock may be, because market participants have not let the shares fall. Next we'll look at the earnings yield of the company. This measures the profit the company has earned against the share price that the investors have paid. Here we want the yield or the returns on the price that we have paid to be as high as possible. Both Bajaj Auto and Hero MotoCorp had an yield of 6% each, whereas Eicher had an yield of 4.3% and TVS Motor had an yield of 3%. The yield is calculated by comparing the price with the earnings per share, that is, what was the profit that the company returned on the price that the investors have paid. So when we went to buy a share of 2723 rupees, we got a profit of 170 rupees on that. All these values are of 2019. So we want the yields to be as high as possible. Let us look at the price earning multiple. This is the current market price compared with the latest 12 months earnings per share. As investors, we want the price earnings ratio to be below 25 times. This particular ratio helps us understand the multiple that we are paying for the earnings of the company. So in this case, the company has earned 170 rupees and we are paying 2723 rupees, which is 16 times more than the earnings. For Eicher Motors, investors are willing to pay 23 times more for the current year's earnings per share. Hero MotoCorp is available at 15 times its earnings, and TVS Motor is expensive at 30 times its earnings. As I mentioned again, the price earning has to be below at least 25 times and as low as possible. Let us look at the averages where the price to earnings ratio was trading in the last 5 years and in the last 3 years. Bajaj Auto's last 5 years average price to earnings ratio was 19 times, meaning the price was 19 times higher than the earnings. Similar was the case for last 3 years as well, and currently we are getting it below the averages of both 5 and 3 years. In case of Eicher Motors also, if you see, both the 5 years and 3 years PE was very expensive, and currently it is available at 23 times its earnings. Similar is the case for Hero MotoCorp, whose current year's price earning is below its averages. Most of these automobile companies have their price earning below their averages of 5 and 3 years. So this is a good entry time to buy them if the other fundamental ratios are intact. Next, let us look at the price to OCF or price to operating cash flow ratio. This is per share based ratio. Like price to earning, price to cash also gives us an idea as to where the company's price is compared to the cash it has earned for each share through its operating activity. Here too, we want it to be below 25 times, which would again signify that we are not paying too much against the cash earnings of the company. Bajaj Auto is expensive at 31 times. Eicher is available at 32 times its OCF or operating cash flow. MotoCorp is very expensive at 52 times. And TVS Motor is reasonable at 18 times. So here what we are doing is we are looking at what profit the company has shown and how much cash has actually come in through operations of the business. So when we see a big variation between the earnings and the operations of the business, that creates a kind of a red flag for us. We want the price to OCF to be below the price to earnings as in valuation metric wise, which would then indicate that whatever earnings the company has shown has got translated into the cash. Most of these companies' cash component is low in the current year compared to its earnings. MotoCorp's price to cash is 52 times higher. Only TVS Motor is available at 18 times its cash earnings. Next, let us look at the free cash flow, and we are comparing where the price is compared to the FCF. In this case, free cash flow is the operating cash flow minus investments done in buying of fixed assets, and whatever is left over is the free cash flow which can be used in giving dividends or using it for buyback, acquisition, etc. Here too we want it to be below 25 times. As we see, most of the companies' investments in fixed assets are very high, except for Bajaj Auto, which has maintained a FCF of 31.7, as good as OCF. Eicher's free cash flow is 65 times higher, that is, price is 65 times higher than its FCF. MotoCorp's ratio is very high, and TVS is available at 52 times its free cash flow. As we go down below and check other ratios, I'll explain what free cash flow means in detail. I'm explaining each ratio in all my videos because many of the investors would not know what these ratios do, or would not know how to read and understand these ratios. Therefore, these videos generally become longer because I have to explain each ratio for all these 4-5 companies that I'm analyzing, and I have to go through 65 ratios. Next, let us look at the price to book value. This ratio helps us again understand where the price is, or what is the multiple we are paid against the book value of the share. In this case, book value stands for the actual value of the share as per the company's books. This is what the price of the share is as per the company. And here we don't want to pay more than 2.5 times the share's book value. All of these companies are trading above 2.5. So when this happens in the group company, peer group company, we can see that we can buy the lowest of the peer group comparison companies, and in this case Bajaj Auto is available at the lowest price to book value. In many of the companies we would not find companies trading below 2.5. In that case, we can use the peer group comparison to understand where the price to book value is, or what is the average price to book value of those peer group comparison. Next, let us look at where the price is compared to the sales done by the company in the latest year. Here we are trying to understand the multiple of the price or the market cap against the sale. This ratio helps us understand what is the sales the company has done in the latest year against its market cap or total value given to the company in the market. Here we want the price to sales to be as low as possible, around 1 times, or even if it's below 1 times, it's always good, because then we are getting the company's shares at a discount to its sales. Bajaj Auto is available at 2.6 and TVS is available at the lowest price to sales multiple of 1.1 times. Here it means that the company's sales are almost equal to its market capitalization, or what value the company is trading at in the market. MotoCorp is also at a reasonable level of 1.5 times its sales. Eicher is very expensive. Its market cap is 5.3 times higher than its sales. Do excuse for the background sounds. Moving on to the next ratio, the profit growth rate of 5 years and profit growth rate of the last 3 years. These ratios help us understand how the profit has been compounding or growing or has a degrowth in the last 5 years, or over the last 5 years and over the last 3 years. I generally like to see the profit and sales growing year on year by the rate of 10% and more. These companies show that the companies have a moat in gaining more and more profits. Bajaj Auto in over last 5 years period has been increasing its profits by 6.8%, whereas from 3 years past it has been increasing the profit at the rate of 4.6%. Both Eicher and TVS Motors have a high growth rate in their profits, and Eicher has increased its profits at the rate of 42% over a period of 5 years. But in the recent 3 years, the profit growth rate has narrowed down to 18%. Same is the case with TVS. In the last 5 years, the profit was increasing at the rate of 20%, but in the recent 3 years, it has mellowed down to 14% YOY. So this helps us understand how these companies are growing their profits. Next, let us look at the PEG ratio. This is the price to earnings compared with how the profit is growing over the last 5 years and over the last 3 years. This ratio helps us understand the price earning that we paid for these companies earlier. Are they justified, are they high, or are they low, or are they reasonable? So in this case, we paid for Bajaj Auto over the recent 12 months, we are paying 16 times the earnings, more than 16 times its earnings, and the earnings are growing at the rate of 6.8% over a period of 5 years. So we can expect to recover the 16 times that we paid faster than waiting for 16 years. That is, if there is no growth in earnings, it would have taken us 16 years with this price earning multiple to recover our capital. But when the company has growth in its earnings, we can expect the capital to come in much faster. So here we want the PEG ratio to be below 1.5 times at least. Anything above 1.5 times means the PEG, that the price earning that we are paying, is quite high. In that case, we have to wait for the price earning to fall further so that the PEG comes to around 1.5 and lower than that. As we can see, for Eicher Motors, the PEG for 5 years stood at 0.6, which means that although we are paying 23 times, even higher than Bajaj Auto, that is also reasonable because we are getting a high growth rate of 42% over the last 5 years. So we can expect that growth rate. But in the recent 3 years, the profit growth rate has fallen, as we saw earlier, at the rate of 18%, which then brought the PEG to 1.3. This is still better than 1.5, which is our benchmark. So this way it helps us understand the price earning that we paid, is that high or low. So if you look at Bajaj Auto, 16 times is good, but when you compare it with the profit growth rate, Eicher's 23 times price earning is justified than Bajaj Auto's 16 times price earning. MotoCorp's price earning is 15 and the growth over a period of 5 years we're getting is 11, so which gives the PEG of 1.3. But in the recent years we see that the profit growth rate has fallen to just 2.8%. That is, the profits are growing at just 2.8% over the last 3 years, which brings the PEG to 5.5. Then what happens is we have to then understand that even this price earning of 15 is not justified, and we'll have to still wait further to buy into the company. TVS Motors, a price earning is 30, but we are getting a growth rate of 20% and 14%, which translates to a price earnings growth ratio of 1.5 and 2.2. Here PEG 5 years is justified, but PEG 3 years becomes expensive at 2.2 times. That is, for a price earning multiple of 30 times, we are getting a growth rate of only 14%. So this way we can understand whether PE multiple that we paid for these companies, is that high or low. Next, let us look at the sales growth rate, or how the sales has been compounding or growing over the last 5 years. Sales is a very important metric to understand because this is where the revenues are generated from, and the whole basis of running a business is to keep increasing the business's sales. It also shows how the management is, how efficient the management is, because that is directly reflected by the sales. And is there demand for this company's products in the market, or is also reflected by sales. So we want the growth rate in sales to be 10% or more. Bajaj Auto's last 5 years growth in sales is 8.5%, and over the last 3 years it has managed to increase it further to 10.3%, which is a good sign. Same is the case for all of these companies. Eicher's sales was growing at 7.6, but in the recent 3 years it has picked up to 16%, highest in the group, along with TVS Motor at 17% growth rate in sales over a period of 3 years. MotoCorp's sales for both 5 years growth rate and 3 years is very stable at 5.9 and 5.8%. Next, we'll look at the return on equity ratio over the 5 years average. And what is return on equity? It measures the profit that the company is earning on the shareholders' money, or money invested by shareholders. Most of the shareholders are interested in looking at RoE because this is the profit that the company has generated on their money. On an average, we want the 5 years RoE to be above 15%. All of these companies have generated a high returns or profits on shareholders' money of above 20%. In the latest year, 2019, the RoE was again very high for all of these companies of about 20%. So these are all good metrics for these companies. Let us look at how the RoE has shaped from 5 years back. Bajaj Auto's RoE has been falling from where it was 5 years back. It has been falling at the rate of 10%. And coming back to the previous ratio, here we can also compare the latest RoE with its average and see whether the RoE has fallen or increased above its average. As we can see, all of these companies' recent RoE is below its 5 years average. So this is a weak sign of the RoE is falling below the average. Eicher Motors' return on equity has been growing from 5 years, and there was a drop for MotoCorp by 5.8% in its RoE growth rate. And TVS has managed a mild growth rate of 1.7% in its RoE from 5 years back. Next, let us look at the return on capital employed over the last 5 years on average. Here also we want it to be above 15% at least. And let us look at what is the component of return on capital employed. We calculate the earnings before interest and tax, that is the operating profit plus the depreciation, and divide that by the average of the capital employed. Now, what is capital employed? Here in this case, in this particular ratio, we have taken up fixed assets and we have added working capital to it to constitute the capital employed into the business. Fixed assets are those assets which are to be held into the business for more than 1 year, and this also includes the depreciation value of the assets. So most of these companies have performed well in keeping their RoCE above 15%. The higher the better, which justifies that the valuation that these companies are getting. We can also compare the recent RoCE with its 5 years average, and then also understand how the companies have done in increasing or whether it's decreasing from its average. So as we can see, just like RoE, RoCEs have also fallen below the 5 years average, which shows a sign of slight weakness. Although these ratios are also very high, no doubt, but compared to its average, it has fallen below that. Next, let us look at return on assets over the average 5-year period. This is the total assets employed into the business and removing out the current liabilities from that. This ratio also helps us understand how the company has performed when we take everything, all assets, and remove just the current liabilities from it. Here too, we want it to be as high as possible. Different sectors would have different RoA ratios, RoCE ratios, and we have to also look at the group companies, how it has been performing, how other group companies have performed in terms of giving returns on assets. Most of these companies have given high RoA returns of last 5 years, which is again a good sign. Next, let us look at the asset turnover. This measures the sales against the total assets employed into the business. In this case, the assets are calculated by adding net worth with the borrowings of the company. Against that, what is the sales the company has generated? This helps us understand the efficiency with which the company's management has done sales against the assets employed into the business. Here we want it to be as high as possible, which signifies that against the assets that was employed into the business, the company has done high turnover in sales. Bajaj Auto's assets were turned over 1.3 times more and converted into sales. That is, sales were 1.3 times higher than the assets employed into the business. Here we want it to be as high as possible, as I mentioned earlier also. TVS Motor has done the best by turning over its assets 3.8 times more into sales. That is, the sales were 3.8 times higher than the assets. MotoCorp also has done 2.6 times more than its assets employed. Next, let us look at the return on invested capital. This is the net block, which means fixed assets minus the depreciation plus the working capital. In the previous thing, RoCE, we saw fixed assets plus the working capital. In this, the depreciation was not deducted, but in RoIC, the depreciation value is deducted. So whichever companies are highly capital intensive, which require a lot of investments in fixed assets, we can also look at RoIC value, which will show us how the companies have done when they have to invest a lot of money into buying of fixed assets or investing in fixed assets. Most of these companies have generated very high RoIC values. The higher the better. There is no fixed threshold or fixed benchmark that we can look at, but most of these companies have done well. Next, let us understand how these companies have performed in terms of earnings, profit, and converting that into cash, and how much of that was invested in buying of fixed assets. So the first ratio we have is the profit after tax of the last 5 years totaled over. Of these companies, Bajaj Auto has earned 20,000 CR over a period of 5 years, followed by MotoCorp at 15,000 CR. TVS profit over 5 years was just 2,600. Now we want to understand, after this profit that the company has shown, how much of this profit was actually received by the company in terms of cash through operations. Because most of these profits after tax value includes depreciation expense, provisions if any, and credit sales, credit purchases, and so on, which are non-cash based and which can change the value of the profit as per the company's accounting standards that they use. So we want the cash flow from operations to reflect the profit after tax that the company has shown over the period of last 5 years. Bajaj Auto had shown a profit of around 20,000 CR, whereas the cash coming in was 15,000 CR, which fell short by 21% of its earnings. Eicher showed a profit of 7,700 and received cash of 8,200. This is what we would want to see in companies most of the time that we are investing in, which is 6.8% above its earnings. That is 8,200 was 6.8% above 7,700 of the profit. MotoCorp's cash was short by 2.3%, which is still okay, but we want a positive value. TVS cash was 54% more than its earnings. The profit shown by the company was 2,600 CR, whereas the cash coming in through operations was 4,100 CR. It is very important to understand the cash flow statement of the companies, because that is where the true cash coming in and going out of the business is reflected. Next, let us look at how much of the cash that the company has earned, of that how much was invested in buying of fixed assets, and finally how much was left over as free cash flow. So the company's free cash flow was almost equal to the cash flow from operations. Hardly anything was utilized in buying of fixed assets, additional fixed assets for that year. So only 3.2% went into buying of fixed assets or investments in fixed assets. Eicher and MotoCorp both have done around less than 50% of investments in fixed assets out of the cash flow that they earned. So Eicher had earned a cash of 8,200. Out of that, it has invested almost 43%, and now it has 4,700 CR left over as free cash, which can be used for acquisition, dividend, or basically it can be used in cash from financing activity or from in financing activities. TVS Motor has invested huge part of the cash that it received from operations, and the free cash flow left over with them was just 1,218. That is almost 70% was used up in buying of fixed assets. This is not a problematic area, but we want that the companies not invest more than 50% of their cash from operations into buying of fixed assets. From 5 years to 1 year, we'll understand how the company's profits and cash flow has performed. The average profit of the last 5 years for Bajaj Auto was 4,000 CR, whereas the latest year's profit was 4,240 CR, which is above its 5 years average, which is a good sign. So we want the current year's profit to be above its 5 years average. Almost all companies have their current year's profit above its averages. Let us look at the last year's profit or rather the latest year's profit in this case, and we can see both the profit after tax of the recent 12 months and the PAT annual are the same because they both represent 2019 values. As soon as the first quarter results come out, these values will change for the profit after tax of 12 months. These will reflect the current 12 months earnings on a 12 trailing month basis. So here we can see that the current year's profit, in fact this is the 4240 is the previous year profit, that is of 2018 values, and profit after tax annual is the current year's profit. So we can see the current year's profit is above its previous year's average, previous year, as well as above its 5 years average. So this is what we want to see, that the current year's profit is above its previous year's profit as well as above its 5 years average. As we can see, most of these companies have managed to do the same, keeping their current year's profit above its previous year as well as above its 5 years average. MotoCorp's profit has fallen slightly below its previous year's profit of 3,500 CR. That is, 2019 value of profit was less than 2018 value. All of these we can look at by percentages, in terms of percentages. So the company's current year's profit was 15% above its average, so we want it as high as possible above the average. So whichever companies have taken their profit above their 5 years average will be considered a better buy. Eicher Motors' profit has grown above its 5 years average by 42%, and TVS Motors has managed to increase its current year's profit by 25% above its 5 years average, which is a good sign. That is, the current year's profit 671 was 25% above its 5 years average of 535. Similarly, we can see how the profit has grown YOY, year on year, from 2018 to 2019. Here, the higher the value, the better it is. As I already explained, MotoCorp's current year's profit has fallen by 7.3% over 2018. Rest, all the other three companies have managed to grow their profits over their previous year's profit. In terms of conversion of profit into cash from operations, Bajaj Auto's cash fell short by 46% over the profit that the company has shown. Most of the all the three companies have shown a fall in their cash earnings against the profit that the company has shown. MotoCorp's cash came in short by 70%. Now the reason why the company has received less cash than what it showed as profit needs to be investigated by going into the cash flow statement and looking at the first entry, cash from operating activities. There it will show why the cash has fallen short. In this case, out of the profit that the company has shown of 3,292 CR, 979 has come in as cash only, which is 70% less. Only TVS Motors cash earnings was higher than its profit it showed. That is, of the 671 CR shown as profit, 1092 came in as cash, which is 63% higher. So we want a value which is in positive as well as higher than the earnings of the company, because cash is a bit difficult to manipulate, unlike earnings or profit value that the company generally shows in their P&L account. Next, we'll look at the recent quarter changes in profit and sales. We're looking at YOY, that is March to March quarter, that is March 2019 to March 2018 comparison, and we are also looking at December 2018 to March 2019 comparison, that is Q over Q and YOY quarterly sales growth rate. Bajaj Auto has grown its sales by 8.9% over its previous year's quarter, whereas the profit has fallen by just 0.9%. Here we want the values to be both positive and as high as possible. I would generally look at a value of at least 10% and more. Eicher Motors sales has fallen by 1%, whereas the profits have increased by 18%. This is also a good sign, but we don't want the sales or profits to go into negative. This is not a loss, but a fall in the profit or fall in the value of sales. MotoCorp sales has fallen by 7% and profit has fallen by 24%. Here we see that for MotoCorp, both the sales has fallen by 7% as well as profits has fallen by 24%. So we don't want to see a negative values for both. In case of TVS Motor, the current quarterly sales has fallen by increased by 9%, but the profit has fallen by 19%. When we look at the quarterly, that is Q over Q sales growth rate and profit growth rate, that is from December to March, the sales has fallen by 0.2, a very minor drop over its previous quarter, but the profit has grown by 15%, which is a good sign. In terms of Eicher Motor, sales has also increased and profit has also increased by 2.2%. So Eicher has done well in keeping its recent quarterly sales and profit growth rate intact. MotoCorp's sales had a very mild growth over its previous quarter, but had a fall in its profit by 5%. TVS Motor also has not done very well. Its quarter-on-quarter sales has fallen by 6% and profit has fallen by 25%, which is of course in a quarterly, in 1 year sense, it is not good. Next, let us look at the net worth of the company. This is the worth that the company is actually, or rather this is the net worth or actual value of the company, and this is calculated by selling all assets of the company and paying off all liabilities, and whatever remains after paying these liabilities or all liabilities is the net worth of the company, which would go to the shareholders of the company. Bajaj Auto is the largest company in the group at 23,000 CR, followed by MotoCorp at 12,000. So this is the size of the company in a way. Next we'll look at contingent liability. These are the liabilities which can arise in the future and for which no provisions has been done by the company in their balance sheet. These are shown as notes to the balance sheet. Most of these companies have very low contingent liability, and contingent liability to net worth as a percentage of net worth, it should not exceed 20%. So most of these companies have managed to keep their net worth very low. The lower the better. Next, let us look at the debt to equity ratio. This is how much borrowings the company has done and comparing it against the equity shareholders contribution. So we don't want the borrowing to be very high against the contribution done by the shareholders of the company. Bajaj Auto, all three companies, Hero, Eicher and Bajaj Auto, are debt-free company. TVS Motor has a marginal debt of 0.4 times its equity, which is not bad. It should be below 1 times at least. The debt to equity should not exceed 1. If the borrowings are high, then the company will have to correspondingly pay more interest cost against those borrowings, which again reduces the profit that goes to the shareholders. Next, let us look at the interest coverage. Since most of these companies have very or no debt at all, their coverage will be very high. This interest coverage helps us understand what is the EBIT the company has earned in 2019 against the interest that it is paying. So this helps us understand the multiple between the interest and the earnings before interest and tax. So we take the EBIT value, EBIT, and divide it by the interest. And this helps us understand how well the company can cover its future years' interest payments. This can also be considered in another way as to what is the EBIT, or how much times EBIT is more than the interest payment the company has to do. Most of these companies, as I mentioned earlier, have a very high coverage of 13 times for TVS Motor at the lowest end to 1400 for Bajaj Auto. Since they don't have any debt, there's no question about paying interest as such. Next, let us look at debt to profit. This ratio helps us understand how much is the borrowings against the company's profit of this year. In other words, we can also see it in this way: in how many years the company can clear off its borrowings using this year's profit. Since these three companies, Bajaj, Eicher and Hero, don't have any borrowings, their profits are all that it goes to the shareholders and there is nothing to pay. TVS Motors borrowings using current year's profit will take 2 years to clear off those borrowings. That is, using the current year's profit, it will take 2 years to pay off the borrowings of the company, which is also very low. And these are all good values for all these companies. Next, let us look at the promoter holding and pledge, if any, of these companies. Promoter holding should be as high as possible. That shows that the promoters have a high stake in running the business in an efficient manner. The higher the better. In terms of pledge, these are the shares that the promoters may have put as pledge with banks and taken out loans against those shares. They may not sell it, but they can take money or take a loan against those pledge shares. Here, I don't want the pledge to exceed 20% of the promoter's shareholding. In this case, none of the companies have pledged any of their shares, which is a very good sign. Next, let us look at the debtors to sales ratio. This is the 2019 debtors value from balance sheet, comparing it against the 2019 sales value from P&L account. So this ratio then helps us understand how much the company has still to collect from its customers against this year's sales. I don't want the collection to exceed 30% of this year's sales. Bajaj Auto's collection from its customers was just 8.5% of this year's sales. Most of these companies have managed to keep it below 10%, which is a very good sign. Eicher Motor has done the best of just collecting just 0.9% from its customers against this current year's sales. When the company's collection from its customers exceeds 30% of its sales, which would signify then that the company is not efficiently collecting money, or it's giving too many days to the customers to pay to the company. In this case, what will happen is, if the company is not receiving money from its customers, then the company has to borrow money from outside to source its working capital requirements or to meet its working capital needs, which would again increase the borrowings and the interest payment that would go out of the company. Next, let us look at the debtor days. How many days were these companies taking to collect payment from their customers, and how efficiently was it collecting 3 years back? So we have a comparison of how the company has increased its collection days or decreased its collection days. The lower the collection days, the better it is. Most of these companies are collecting within less than 35 days or around less than 30 days. In fact, the collection days have gone up from where it was 3 years back. Companies can give more credits to its customers based on the demand for their products. Now, Bajaj Autos 3 years back was collecting payment in 11 days, and in the 2019 it was taking 30 days. So basically they have extended the days in which they collect payment from the customers. This actually happens when the companies are facing some issue in terms of selling their products. The higher the debtor days, the weaker the stock is. So anyways, these companies are collecting at a very reasonable pace of 30 days. Next, let us look at the inventory turnover, how these companies are turning over their inventory into sales, and how it was doing it 3 years back. So we have a comparison that the company's inventory, Bajaj Auto's inventory turnover, that is turning inventory into sales, was 30 times more 3 years back. Now it is 35 times. So it has done much better of converting its inventory into sales. Eicher Motors inventory has reduced by 19 times in the current year compared to the 3 years back value of 21 times. This ratio helps us understand how well the company is converting its inventory into sales. MotoCorp was converting inventory 42 times more into sales, whereas in the recent year it was just 35 times. Similar is the case for TVS Motor, where the last 3 years back inventory turnover was 14 times, whereas the current inventory is 17 times into sales. This shows the efficiency with which the companies are turning over their inventory into sales. Next, let us look at the 5 years operating profit margin that these companies have earned. Bajaj Auto has earned an OPM of 18% on average from last 5 years. I want the ratios to be above at least 15% on average as well as for the recent year. TVS Motor has performed very poorly in terms of earning OPM of just 7.3% on average. Even in the recent year, it is just 3.7%. Net profit margin is just 3.7%, whereas OPM was just 7.3%. So when the OPM is at least 15%, then we have a margin of deducting the interest from that, tax, depreciation, and so on, all other expenses. Therefore, we can expect an NPM of at least 10% after deducting expenses from the OPM. All the three companies, Bajaj, Eicher, and Hero, have done well in keeping their OPM margin of 15% and above. In terms of NPM, again, Bajaj, Eicher, and Hero have done well of keeping the net profit margin above 10%. TVS has not done well. TVS margin is just 3.7%. Even in previous year, that is 2018, the margin was 4.4% on the net sales that the company did. The highest net profit margin was for Eicher at 21% on its sales and Bajaj Auto at 16% on its sales. Next, we will look at the current ratio and the quick ratio. The current ratio is a liquidity ratio and it measures how well the company can clear off its short-term obligations by selling the short-term assets that it owns. Here we want the ratio to be 1 or greater than 1 at least. Anything below 1 means that the company is not in a liquid position or enough liquid position to clear off its current liabilities. In this case, only TVS Motors current and quick ratio both fell below 1 times. That is, its current assets are not enough to pay off all the current liabilities that may arise. This is not a ratio which rather we use this ratio just to understand in the position that the company is in in terms of its current assets and current liabilities. In terms of quick ratio, this is the ratio that also measures the short-term obligation payment that the company has on it. But here we are looking at selling only the most liquid assets like cash, or converting fixed deposits, or selling of mutual funds and converting into cash and paying off the liabilities. In this case, Bajaj Auto and Hero MotoCorp have also fallen below below 1 times, and Eicher has still managed to keep it above 1 times. So here we want it to be as high as possible. Next, let us look at the gross block, that is the total assets of the company valued at their cost of acquisition. This does not include depreciation that has been deducted so far on the total assets of the company, and the assets which the company owns but all the complete depreciation has been charged on it, those are not included in this. So the company's current assets holding, including the depreciation or at the cost of acquisition, we see Hero MotoCorp has invested the highest at 11,628 CR, and Bajaj Auto's gross block or total fixed assets at acquisition cost was 4,296 CR. On that, we have the accumulated depreciation, that is how much of that gross block has already been depreciated till now, that is 2,532 CR, which is 58% of the gross block. So we want maximum gross block to be depreciated till now, so that whatever is remaining can be done over the next few years. So this also helps us understand how well the company is covered its gross block and depreciation, because depreciation will ultimately go to the P&L account and reduce the profit from there. So most of these companies' depreciation, accumulated depreciation is high, above 30%. Hero MotoCorp's depreciation, accumulated depreciation is almost 60% of its gross block. That is, of the 11,000 CR of total assets, 7,000 has already been depreciated. Next, let us look at the net block. This is the assets or gross block deducting the depreciation and adding any new assets which have been purchased in this year. Bajaj Auto's net fixed assets were 1,764, and they are depreciating these net block assets at the rate of 15%, that is 266 CR in the current year was charged as depreciation on the net block, which translates to 15%. All these companies have a very similar depreciation rate. This is important to understand, because if the company is charging a very high depreciation rate, that would automatically reduce the profit for that company. And if they are reducing at a very low rate, or if they are depreciating at a very low rate, then that would increase the profit of the company. So we don't want to, or we want to in fact see how efficiently the companies are depreciating their assets over a period of years. So most of these companies' depreciation rates are very similar to each other. Here I want it to be as high as possible, but not very high. If the companies are depreciating at a very high rate, then as I mentioned earlier, the profits will be reduced. Next, we'll look at the dividend yield. This is the dividend that the company has paid on the latest price, or in fact, rather, this dividend yield percentage is based on the current price, but using the dividend received in the last dividend received in last 1 year. Bajaj Auto and Hero MotoCorp have been paying a high dividend of 2.2 and 3.4% on the investment done by shareholders, whereas Eicher and TVS have done a less than 1% of dividend yield. This concludes my analysis of these companies. Let me give it a score and also color code which ratios for which companies are the best and which have done poorly, and then we will continue our analysis. I have color coded and ranked all the ratios for all the companies. Let us go through them once again. Bajaj Auto's face value and Eicher Motors face value was 10, which means there was no dilution as far as face value was concerned. Hero MotoCorp's face value as well as TVS face value were diluted by its current face value is 2 and TVS Motors face value is 1. Bajaj Auto's shares have fallen the least, followed by Hero MotoCorp at 26% only. For TVS Motor and Eicher, both have fallen by a high percentage of 36% for Eicher and 28% for TVS Motor. In terms of earnings yield, that is the earnings on per share basis, both Hero MotoCorp and Bajaj Auto had a earnings yield of above 6%, whereas Eicher and TVS both had an earnings yield below 4.5%. Price earning wise, most economical was Bajaj Auto and Hero MotoCorp, available at 15 and 16 times when compared with the 12 trailing months earnings or the latest 12 months earnings. And Eicher as well as TVS Motor both were very expensive at 23 and 30 times. That is, price was quoting 23 times higher against the earnings of the company for Eicher and 30 times higher against the earnings for TVS Motors. So we want it to be as low as possible. Next, we'll look at the operating cash flow. Operating cash flow and price comparison, Bajaj Auto has done the best along with TVS Motor, available at 18 and 31 times. Even Bajaj Auto's price to OCF is high at 31 times. I would like it to be below at least 25. But here these two companies have done the best. Eicher's CMP to OCF is very high at 32 times and Hero MotoCorp's ratio is extremely high at 52 times. In terms of free cash flow, price to free cash flow, again Bajaj Auto has done the best at 31.7 times, followed by TVS Motors, and Eicher and Hero MotoCorp's price to free cash flows are very high at 65 and 839 times for Hero MotoCorp. As far as book value, price to book value is concerned, Bajaj Auto and Hero MotoCorp are available at the most reasonable in terms of group companies at 3.4 and 4 times, whereas Eicher price is quoting 5.8 times higher than its book value, along with TVS Motor at 6.2 its book value. So these are trading at extreme high valuations. When we want to compare price with sales, Hero MotoCorp's and TVS Motors price is very reasonable at 1.5 times higher than its sales, whereas Bajaj Auto's price is quoting 2.6 times higher than the sales, and Eicher Motor is extremely high at 5.3 times its sales. In terms of profit growth, Eicher and TVS Motor both have done well by growing the profit over a period of 5 years at a high percentage of about 20. Bajaj Auto and Hero MotoCorp's profit growth rate was low at 6.8 and 11.6%. In the recent 3 years also, if you see, both Eicher and TVS have grown their profits at a high rate. So for both 5 years and 3 years, Eicher Motor and TVS have managed to grow their profits at a high percentage. In terms of PEG or price earnings to profit growth rate comparison, Eicher Motor is available at the best valuations. Even though its price earning is 23 times, we are getting it at the best valuations when we compare that price earning with the profit growth rates. So Eicher Motor has done the best as far as valuations are concerned, and Hero MotoCorp in last 5 years has done better, and TVS Motor in the last 3 years at 2.2 PEG. Hero MotoCorp in the recent 3 years has seen its PEG go to 5.5. Its profit growth rate has dropped to just 2.8% compared with 11.6% in the previous 5 years. So therefore the PEG has gone up to 5.5. Bajaj Auto's PEG is also high at 2.4 and 3.5. The price earning that we are paying for Bajaj Auto, we are not getting the equivalent growth in its profit. That is why we see a PEG of above 1.5. Sales growth rate. Let's check out sales for both 5 and 3 years, how it has been compounding. TVS Motor has done the highest sales growth over a period of 5 and 3 years at 18 and 17%. Bajaj Auto's sales over a period of 5 years is the second highest at 8.5. Eicher's sales is low along with Hero MotoCorp. Over a period of 3 years, sales highest growth was seen in Eicher at 16%, and TVS Motor was growing its sales over the last 3 years at the rate of 17%. Again, Bajaj Auto has managed to just increase its sales over the recent 3 years at 10% compared with 8.5% over the last 5 years. So this is better, but it's quite low in terms of peer group comparison. Hero MotoCorp has seen a low sales growth for both 5 and 3 years at 5.8%. In terms of return on equity, Hero MotoCorp and Eicher has given a good return on shareholders' money of 33% and 32% over a period of 5 years. Although TVS and Bajaj also have done well compared to Eicher and Hero MotoCorp, it's considerably low. The recent ROE is also very good for Eicher and Hero MotoCorp, followed by both Bajaj Auto and TVS Motor. ROE growth rate was seen increasing for Eicher Motor at 7% from 5 years past, and TVS Motor has also managed to grow its RoE over a period of 5 years. Bajaj Auto and Hero MotoCorp saw a fall in the return on equity from 5 years past. In terms of return on capital employed over the period of 5 years on average, both Eicher and Hero MotoCorp have returned a high percentage of 47, and even Bajaj Auto and TVS have done well at 34 and 23%. Recent ROE is also very good for Eicher Motors and Hero MotoCorp at 40% and 39%. In terms of return on assets also, it's a similar case. Eicher and Hero MotoCorp have done very well. In terms of turning over assets into sales, Hero Motor and TVS had done the highest turnover of assets into sales. As I mentioned earlier, the assets in this case are the net worth plus the borrowings. In terms of invested capital, return on invested capital, both Bajaj Auto and Hero MotoCorp have done the best of giving a returns of 270% over its invested capital. In this case, invested capital is the net fixed assets plus the working capital. Next, we'll look at how over the period of 5 years, the company has managed to convert its profit into cash. Here we want the CFO to be more than profit after tax, at least. So over a period of 5 years, both Eicher and TVS Motor have managed to gain more cash than what the company has shown as profit after tax value. Bajaj Auto's cash was fallen short by 21% over its profit after tax value, and Hero MotoCorp's cash came in short by 2.3%. That is, if you look at the values, out of 15,442 CR, 15,087 CR came in as cash. That is a 2.3% shortfall. Similar was the case for Bajaj Autos, whose cash came in less than its earnings. In terms of free cash flow, that is how much of the operating cash flow being utilized into buying of fixed assets. We see Bajaj Auto has used the least amount in investing in fixed assets, followed by Hero MotoCorp utilizing 36% of its cash from operations. TVS Motors have invested a major chunk of their cash into buying of fixed assets, and of the cash earned of 4,100 CR, their free cash flow is just 1,218 CR. That is 70% has been utilized in buying of fixed assets. Next, let us look at the profit after tax compared with the average of 5 years. Eicher Motors has managed to increase its profit at the highest pace over its average of 5 years. Its profit was 42% above its 5 years average. TVS Motors' latest year's profit was 25% higher than its 5 years average. Bajaj Auto's profit also increased by 15%, followed by Hero MotoCorp at 6.6%. Next, we'll look at how the companies managed to grow their profits YOY, year on year, from 2018 to 2019. In this case, both Eicher and Bajaj Auto have managed to grow their profits at the highest rate of 12% and 9.7%. Hero MotoCorp saw a drop in its profit, or the profit fell by 7.3% over its previous year. In terms of conversion of profit into cash, only TVS Motor in the recent year has managed to receive 63% more cash than its earnings. Rest all the three companies cash has fallen short by 70%, 28% and 46% of Bajaj Auto, which means the company has not been able to show cash for the profits that the company has earned. In terms of recent quarterly sales growth rate and profit growth rates, YOY growth rate was maximum highest seen for TVS Motor. Sales grew by 9.4%, and for Bajaj Auto the sales grew by 8.9%. Eicher Motor and Hero MotoCorp's sales has fallen by 1.1% and 7.9% over March to March quarter. When we look at the profit grew highest for Eicher Motor. Even though sales has fallen, the profit has grown at 18%. Profits for both Hero MotoCorp and TVS Motor saw a huge fall of 24 and 19%, which means not only was the sales falling by 7.9%, even the profit fell by 24% for Hero MotoCorp. For TVS Motor, although the sales increased by 9.4%, the profit fell by 19%. Sequentially also, that is quarter on quarter, highest growth in profits was seen for Bajaj Auto and Eicher Motors. Even for Hero and TVS, it both fell by 25% and 5% each. In terms of net worth, that is the size of the company, Bajaj Auto seems to be the largest of the lot, along with Hero MotoCorp at 12,000 CR. None of the companies have a very high contingent liability against their net worth, so it's okay. In terms of debt to equity, Bajaj Auto, Eicher and Hero MotoCorp have no debt at all, so they're all in the same category. TVS Motor had a mild debt of 0.4 against the equity. In terms of coverage, Bajaj Auto and Hero MotoCorp had the highest coverage along with Eicher Motors. Even TVS Motors 13 years or 13 times its EBIT EBIT being 13 times its interest cost. TVS Motor is also doing well. In fact, all of them have been doing well. In terms of debt to profit, again, since none of these companies have much of debt, their debt to profits are good, except for TVS Motor, whose borrowings were 2.1 times higher than the profit. Promoter holding. Most of these companies have high promoter holding. Bajaj Auto had 51 and TVS Motor had 57. So both of these companies had above 50% promoter holding. None of the companies have pledged any of their shares. In terms of debtors also, all of these companies are doing very well. by keeping their debtors or customers credit or customers who have taken on goods on credit, they're very less compared to the current year's sales. All companies are collecting payment from their customers at a very high days, within 30 days, that is collecting very fast. So this is also good. In fact, Eicher Motors is just taking around 4 days approximately to collect payment from the customers, which is a very good sign. 3 years past also, we saw most of these companies had been collecting at a very fast pace of less than 20 days. Although in the current year, the collection days have increased considerably from 3 years back. In terms of converting inventory into sales, both Bajaj Auto and MotoCorp had a high conversion of inventory into sales. Both of these companies converted 35 times more than its inventory. For 3 years back also, we saw the same state where both of the companies were converting a very high inventory or converting inventory into high sales. 5 years OPM margin was highest for Bajaj Auto and Eicher Motor at 18% and 26%. MotoCorp's 5 years average OPM was very near to the benchmark of 15, followed by TVS Motor at even below that at 7.3%. So TVS Motor is of course not doing very well in terms of managing its operating cost. Net profit margin was good for Bajaj Auto, and even in the previous year, that is 2018, they've done a 16% of NPM. Eicher Motor had a high NPM value of 22 and 21%. Even MotoCorp has managed to be near its threshold or benchmark of 10%. So this is also good. TVS Motor has done very poorly in terms of earning net profit margin of just 3.7 and 4.4. In terms of current ratio and quick ratio, Eicher Motor had a very good quick ratio and current ratio, that is liquidity ratio. That is how well they could clear off their current liabilities using current assets. So they have done well. All other companies have a poor current ratio and quick ratio values. In terms of depreciating the assets, or how much of the total assets have been depreciated till now, the highest depreciation was by MotoCorp and Bajaj Auto of above 50%. Almost 60% of their total gross block was depreciated, and only the balance, that is 50%, was left over for depreciation. As I explained earlier, if the company's accumulated depreciation is high, then whatever is left over will create less pressure on the profits going ahead. In terms of depreciation rate on the net block, after removing out the accumulated depreciation, the current depreciation rates of all the companies are very nearby to each other at 15-16%, so that is good. Dividend yield was highest for Bajaj Auto, giving dividend at 2.2% of its current price, followed by MotoCorp at 3.4% of its current price. Now let us finally club all of these ratios into 6 metrics or 6 groups, which are efficiency, solvency, cash flow, growth metric, that is sales growth, profit growth, return metrics, valuation metrics. I have arranged all of these ratios in terms of these metrics to understand, for me, efficiency of a company, or how efficiently the company is managing its different variables, different resources, is very important. That shows the management quality. Along with that, solvency metric comes second, where it shows how liquid the company is, what is the promoter's pledge, what is the promoter holding, and so on. Cash flow metric compares how much cash has come in against the earnings of the company. Growth metric shows the profit and sales growth over a period of 5 years, annual growth rates, as well as quarter-on-quarter growth rates. Return metrics or profitability metrics shows us how much profit the company has earned against different variables like equity, borrowings, assets, and so on. and valuation metric will help us understand how where the price is, or how reasonable the price is compared to different variables like earnings, book value, sales, cash, and so on. So we see for efficiency metric, Hero MotoCorp has the best efficiency metrics of 36 points, followed by Bajaj Auto at 35 points. So they are very nearby to each other. In terms of solvency, Eicher was the most solvent of the lot, followed by Bajaj Auto. In terms of cash flow, the maximum cash coming in against the profits of the company was for TVS Motor at 9 points, followed by Eicher at 3 points, or total 8 points. And all of these companies are very nearby to each other with a difference of just 1 point each. 9, 8, 7, 6. Total 6 points they got for the cash flow metrics. In terms of growth, how the companies is managing its sales and profit growth, Eicher Motors profit and sales growth rate were very high, and it got a 40 points above almost all of these companies. And TVS Motor has also managed to grow its profit and sales at a good rate and has got 31 points, and very nearby was 30 points for Bajaj Auto. So both of these companies are very nearby each other. In terms of return ratios or profitability ratios, highest profit for different variables, like as I mentioned earlier, for equity or for borrowings, assets, and so on, highest was for Eicher Motor at 35 points, followed by Hero MotoCorp at 34 points. In terms of valuation metric, or how cheap the price is, or what is the value of the price that you are going to pay against different variables, we find that Bajaj Auto's share is the most reasonably valued or can be bought at the most reasonable price, or its most cheapest one available as of today, followed by TVS Motor at 3 points, or total 20 points. So finally when we want to wind it up, I see that both Eicher and Bajaj Auto are a very good buy at 16 and 18 times, or 18 points total. Even in the total individual ratios, both Eicher Motor has got the highest at 146 points, total 146 score, and Bajaj Auto has got 134 score, followed by Hero MotoCorp at 122. TVS Motor is far behind at 103 points only. So this concludes my analysis of these 4 companies. Thank you for watching this video.